Thanks, Chris. Let's go behind the numbers now with Scott Phillips from Motley. Scott, good evening to you. And as Chris mentioned, the buy now, pay later sector went through the roof today. Can they keep going?
Tomo, it's an amazing story and good evening. A $39 billion deal yesterday, another 11.5% today. Look, from now on, the Afterpay share price is absolutely locked into lockstep with the Square share price in the US. As Chris mentioned, Square was up, so Afterpay is up. That's going to be the story between now and whenever the takeover finally happens. And of course, at that point, Square shares will trade, or a derivative of those, will trade on the ASX. So plenty more to come, but the Afterpay deal pretty much priced in by now.
All right, Scott. Now, biggest loser today was online betting group PointsBet, down close to 14% after finalising an equity raising deal.
Yeah, look, when a company goes to raise money from the market, it's kind of at the mercy of how much people want to pay. In this case, the cash was raised at a 29% discount to the previously traded price. And basically what that means is the rest of the market looks around and says, hang on, if the new guys are buying at a cheap price, we think the price should be lower as well. That sent the share price down 14%. Hopefully PointsBet can use that money for good and that'll see the share price rise again. Of course, if they waste it, it will have been a very, very expensive mistake.
Two Reserve Bank decisions today. One came as no surprise. The other perhaps wasn't as widely expected.
Yeah, that's a really good point because at the moment, the cash rate of 0.1%, you could have locked that on. You would have had very, very, very long odds of anything else. And the RBA didn't surprise. Where they did surprise a little bit was the bond buying program. Now, it's a little bit of kind of esoteric finance, but basically when the RBA buys bonds, it keeps medium-term interest rates down. That's exactly what they're trying to do. Now, that bond buying program was scheduled to start tapering next month. It'll now go ahead as planned, despite some expectations the RBA might take its foot off that pedal just for a couple of months while we're in the middle of lockdown. The Reserve Bank board, if you want to take some optimism out of the statement, basically saying, look, the economy bounced back quickly last time. We think it will again, so there's no need to stop the bond buying. So good news, if you like, optimism from the RBA, albeit it might make things a little more precarious for the next 6 or 8 weeks.
The RBA decision saw the Aussie dollar jump, with Westpac expecting it to push back to 75 US cents and beyond.
It's been all over the place recently, Tomo, and this is the really big question. Of course, the exchange rate largely set by two things: the economic growth and the relative interest rates between two countries. At the moment, the US is flying economically, and their interest rates are higher than ours. That generally pushes their dollar up, and in so doing, pushes our dollar down. The fact that the RBA is going to taper this bond buying program as planned did surprise the market, and that sees the dollar go high because it should, in theory, see medium-term interest rates rise over time, again, addressing that disparity. Whether that happens, of course, and what happens between now and then, an open question. But if it does continue, as Westpac says, it should be the case the dollar rises slowly.
Scott, finally, what are those futures telling us about Wall Street tonight?
Well, last night the futures started well, but the market ended up down. The same applies at least to start with tonight. The futures up about 1/3%. Hopefully this time we can keep that lead because we'd like some green on our market tomorrow.
Scott Phillips, thank you.